Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Welcome to another episode of How I Raised It, the podcast where we interview founders of startups who have successfully raised capital. Today with me is Stephen Kuhl of Burrow. Welcome, Stephen.
Thank you for having me.
Glad you could make it. So let's just start off with what is Burrow, what do you do, and why did you start the company?
Sure. So Burrow is a direct-to-consumer furniture company. We specialize in a luxury modular sofa. The idea for the company kind of came about when my co-founder and I moved to Philadelphia to start business school in 2015, and we had to buy furniture. And I went through the IKEA process, and my co-founder struggled through the West Elm process, which he was told he'd have to wait 12 weeks for the color he wanted, and then to avoid paying for shipping for the color he didn't want, he ended up dragging the sofa home on the sidewalk himself. And just from talking with people and doing a lot of research, we found that the furniture industry is pretty messed up. And one of the biggest challenges is shipping large furniture like a couch. Yeah. And so what we did was, took a page out of the mattress company books and figured out a way to reverse engineer a high quality couch to ship in compact boxes. And doing that allows us to cut out a large amount of money that's traditionally baked into shipping the product from a factory to warehouses to local retail stores. And then it also just makes it infinitely more convenient for people to get into their homes if it comes in boxes that can be delivered with UPS ground mail.
Interesting, yeah. I was going to ask if you were looking at the mattress guys and inspired by that. It seems to be this trend of being able to buy things through the mail you couldn't buy. Or I guess, if you rewind the clock a long ways, you had your Sears Roebuck catalog from, many years ago, and now we're kind of getting back to that in some ways. Very interesting. How much money have you raised?
We have raised $4.3 million to date.
And is that a mix of VCs and angels, or what's the breakdown?
Yeah, so when we first started in spring of 2016, we raised about $330K from friends and former bosses and one small seed firm. Then we got into Y Combinator, and so they invested some money. And then coming out of YC, we raised the rest of it, with the other $3.9 million from seed investors and angel investors.
So let's see, which batch or which cohort of YC was that? When was that?
We were summer 2016.
Okay, gotcha. So 300 through YC, the rest after it.
Yeah, 330 before, 120 from YC, and then the rest afterward.
Gotcha. Let's break those apart a little bit. Congrats on YC. That's pretty exciting.
Thank you.
Tell us the story of raising that first chunk. Was it all just folks? How did you meet the investors in that round? Was it all related to demo day? Give us the story of raising that first amount.
For the before YC?
Yeah, let's start with that.
So that initial amount was actually pretty easy, and it kind of gave us this false sense that like fundraising is easy. Because the first checks were from, so Kabir and I, my co-founder Kabir and I, we were in business school at Wharton, and this was at the end of our first year. So we raised money from some of our friends in school who had previously worked at private equity firms or hedge funds, and those were small checks, like $10,000, $20,000, and those are from, and then also from our former bosses at previous jobs, and these are all people that are betting on us, Yeah. So they don't really care what we're working on. I mean, they do a little bit, but for the most part, they assume that we wouldn't be asking for money unless we were really serious about something. So getting those checks was actually pretty easy, I thought, because if you have a good enough reputation with people that you've worked with or that you can always find people to bet on you. And for a lot of people, that typically looks like friends and family. Neither of our families had really any money to invest, so we just went through our networks with people who did.
The friends part.
Just the friends part, just the friends and bosses part, yeah. And then we got one firm, Red and Blue Ventures, who invests in pen-related startups. They put a $100,000 check in, and that was all on a $7 million cap, 20% discount safe note.
Okay.
And
this is before product, right? This is...
Yeah, we had a pitch deck.
Uh-huh.
So that was, a lot of promises built in there at that point. We didn't have a manufacturer yet. We didn't have a product. And that's actually something that was kind of interesting, is that there are a lot of comparisons to the mattress companies, but for us, the mattress companies didn't really invent a new product. Like the idea of a foam mattress and being able to roll it up like that had been around previously. They just started marketing it that way as like the differentiator. And so for us, it was a lot harder to figure out a way to make a nice couch, a high-end luxury couch, fit into boxes. But we thought, it's not rocket science. We can figure it out. It did turn out to be a lot harder than we anticipated.
Uh-huh.
So we raised that money. Then we went to YC, and so YC does their standard $120K for 7% equity. And we also got a $20,000 check from Highland Capital Partners. They have this thing called Summer at Highland.
Okay.
And they will take 5 or 6 student-founded companies, most of which are undergrad companies, but then they took us and another company from HBS, and they give you office space and a little bit of money and some mentorship for the summer. So that summer of 2016, we worked out of their office in Palo Alto, and then commuted down to Mountain View for Y Combinator.
Gotcha.
Yeah, so that initial amount of funding was great, and like YC was amazing. We didn't expect to get in. I don't think anybody really does.
I've applied,
we're not
I didn't even get the interview, so yeah, it's.
I mean, it's interesting because we were not a traditional YC company, and they're doing more and more consumer physical products, but. We're not a tech company, so that was interesting being around the other companies there. People would ask us, what we do. We'd say, we sell sofas, and they'd be like, software? And we're like, no, sofas. And they're like, for what? And you're like, oh, just sit on, don't worry about it. Like,
that's funny. That's great.
But yeah, so then YC, their whole thing is they prep you to raise money, and I think they have an interesting take on the fundraising process because. They're very I don't want to say they're anti-VC because they have connections to like literally every single venture capital firm in the world. Yeah. But they push founders to, especially for the seed round, to raise on safe notes because it allows you to push off the conversation evaluation to a much later date when you actually have traction to tie, a valuation to.
Yeah.
And it also allows you to just get money faster. And that was kind of the reason why we raised on safe notes, was by the time we finished Y Combinator and got the demo day in August of 2016, we had a bunch of pre-order traction, but we hadn't delivered any products yet. And we were kind of still tinkering with the design as well and figuring out a bunch of manufacturing challenges. So for us to go raise a proper seed round, I think would have taken quite a lot of time and effort, and it was 2 of us running the company, and we were also still in business school, so we couldn't afford to have one of us go take 2 months off and raise full time. So we just raised on safe notes from people who were interested, and our strategy was as follows, and there's different schools of thought on how you should set the different caps, but we thought let's set a more aggressive valuation cap to start and then not change it throughout the entire process. Because if we're raising from somebody, 3 months from now, if we go to raise from someone else 4 months from now, I don't want to have that conversation of why the valuation has changed in the last month. I just figured let's just keep it the same. And then as we get traction, it'll get easier and easier to raise.
Touch on that for a minute, because in your very first raise, you had a valuation cap on a convertible note, right?
On a safe, yeah.
Oh, it was all been safes. No,
That was
no
also
notes.
that was a safe, yeah. That
Okay,
was a
okay,
safe.
okay. That makes sense. That makes sense. So you kind of set that safe valuation cap really in the initial days, and you carried that through all the YC program
Yeah,
stuff.
so we started with a 7 million cap before YC,
Yeah.
and then when we raised after, we raised it to 12. We raised everything else after that on a 12 million cap, 10% discount. Save.
Okay, I got you. That makes sense. So the investors that came in, how did you find them? This is like kind of a basic question, but people always want to know, how do I find and get in touch with these investors? Were they mentors at the YC program? Were they people that met you at demo day? Where did you actually find these people?
Yeah, so there were a bunch that came from demo day, and it's people that are like totally random. Like there's a lot more people that watch remotely the demo day presentations, and so like Matt Bellamy, who's the lead singer of Muse, he like after demo day and was like, "Hey, I want to invest," and I was like, "That's really cool." Like I had no idea that you were watching this, and so we met a bunch of people like that, and there's like former founders. There's a lot of people like that that reach out to you after YC, and then so we raised about $1 million within the next, call it month after demo day, just from people that had watched the demo day presentations. The rest of it, we just we found people just by networking over time. It is a lot of current investors that will introduce you to people in their network. We did an angel list syndicate, which introduced us to a bunch of people who then introduced us to like their friends, and you just find people who introduce you to other people. And for us, our strategy was, let's go after some bigger checks, but let's not ignore the smaller ones. And that's not to say you want to take like $5,000 checks from people, but we raised our minimum to like $25,000. And getting $25,000 checks isn't that challenging, especially as you start making more and more progress. And it can be anybody, like it can be your dentist or, anybody who's looking to invest, and people like investing in companies that they can talk about too. And startups are a really, quote unquote cool thing for people to talk about. And you send them the, monthly investor updates, and it gets them excited. So, I think that's something that is often overlooked. Is I think people are always chasing these seed firms, but it's like if you go after a number of these $25,000 checks, they add up, and some of the people end up writing bigger checks than that. And once we started delivering products in spring of 2017, a couple of the YC partners personally invested. So Michael Siebel, who's the CEO of YC, and Justin Kahn, who is the founder of Twitch, they both invested and then introduced us to people in their network. And so a bunch of their friends would write like 50 to 100K checks. And all that stuff just kind of adds up. Red and Blue Ventures, who had invested that 100K back in the day, they invested a couple $100,000 more in a series of tranches as we made progress. And then we met Interplay Ventures last summer, and they wrote a $500,000 check. And it was like, over time, as you're making progress, it just becomes it's an easier and easier case for people.
Yeah.
And so that's why I think raising on safe notes as you go is not a bad thing to do. But there is some strategy to it that we kind of figured out over time. And that is, if I told people, and number one, we didn't know how much money we wanted to raise in total. We didn't know how much we need. There were a lot of like hiccups that we ran into on the manufacturing and supply chain side that just required a lot more money than we anticipated. And so we never would have been able to know for sure up front that like $4 million is the number that we need to prove this out. So like raising over time is good, but if I told people in the beginning we're raising $4 million and we have like $1 million in the bank, they would be like, okay, sounds like you don't have anybody interested in you. And so I think what we found worked was telling people like whatever we had raised to date was the amount that we're raising, but like it's not a hard cap. We would like a little bit more cushion,
Sure.
and so that everyone feels like they're the last check in the door, which you could say that's a little bit dishonest, but it's like they're not going to invest unless they're interested in the company and they believe that you're doing something worthwhile. And that part of it I see more as just like a gaming exercise and like consumer behavior, or human psychology rather. It's like, and it works.
Yeah.
So
Oh, I think the whole the optics matter, right? I think I remember AngelList used to have a little meter showing how much of your round was committed already, right? So if you're raising $1 million, they used to have a little bar graph, if you were 2/3 or half the way, and I think that it has a psychological effect on people. It's that fear of missing out that we all have. So that's interesting to hear that approach. So really, you're kind of, you have two venture firms in there, but they're both fairly small seed size checks. So is the strategy to go after a proper A, at some certain threshold of MRR or pre-orders, or what do you think?
Yes, yeah. So the next step will be to do like a proper Series A. So we're done raising our seed round, and in fact, we had an announcement. We put out a press release in early December, formally announcing our seed round, and it was too challenging to explain the process of raising safe notes to reporters. So we just kind of like pretended like it was a one-time standard seed round that was led by Red and Blue with participation from Interplay Ventures and a bunch of angels, and which is not inaccurate. But I think it is kind of funny. We started getting people reaching out that were like, wow, like you guys, that's great. You just raised a round. And we're like, not really. Like, it's not like we have $4 million in our bank right now. But yeah, so the next round will be a proper Series A.
And you're a physical product, consumer product company. My familiarity is more in the SaaS space. I know what economics look like from that. But what are your metrics you're kind of aiming for before you know it's time to go raise? You've got inventory and all kinds of other things to contend with that, other firms don't. How do you think about this round in terms of both maintaining your cash cushion and where you need to be to raise a Series A? Are there benchmarks that you're sort of shooting for a proper Series A? And what are they? I don't even know what they would be.
Yeah, it's a good question. And I think VCs will tell you and have told us like, oh, like whatever your numbers are now, like, oh, let's see what you do next quarter. Like, that'll be really great. And I think you can fall into this trap of like always having a carrot kind of dangled out in front of you. For us, we had our own internal benchmarks for when we were ready to raise a Series A, which were, number one, we switched manufacturing from Mexico to the US last year. And so we wanted to have that completely done, fully transitioned over, so that we could show that operationally we're ready to scale. The second thing was we kind of arbitrarily picked a revenue number to hit. And VCs have kind of, validated this, like, you need to be doing more than $500K a month in revenue. And so we did cross that threshold in Q4 of last year. And then the third thing was kind of, how do we get really efficient with our customer acquisition and make sure that we are very profitable on every sale? Because with our product, it sells a 3-seater couch sells for over $1,000, and our average order value is a little over $1,200. So we're on a unit economics basis, we're profitable on every sale. But you obviously have to hit the volume required to cover all your operating costs. So we could get break even in Q2 if we wanted to. It's just a question of, do we want to optimize for scaling or do we want to optimize for, not being reliant on outside capital. And that's something that we've kind of struggled with, where it would be great to get to the point where we are break even or slightly profitable, because it gives us like the ultimate bargaining chip, which in fundraising is you can just walk away from a deal.
Yeah. Sure.
And if you can do that, VCs are kind of at your mercy if you want their money and if they're interested. So we've kind of played around with that, but our existing investors, based on the traction that we've gotten to date, are really excited, and so they've actually been pushing us recently to like take more money from them, which I think for us is a sign that now is a pretty good time to go out and raise, and I think our strategy with working with VCs for the next round, and time will tell if this works or not because we haven't raised the Series A, but our thought process is you want to create some sort of sense of urgency for VCs, and that is to say, like, if you feel confident that you can get some term sheets and interest from people, use that to your advantage to tell VCs, like, look, of course you'd love to see me, prove this out for another year and de-risk it, but like, we feel like now is the time to invest in growth, and we're pretty confident that we'll be able to get a round done. So we're gonna raise it now, and you got to give people a deadline, and I think that does a lot for proving if people are interested or not.
Yeah, I like that sense of urgency and deadline. That's good stuff. Do you have? I haven't followed too closely, but I've read a little bit about the mattress firms and how they're raising money. Do you have a competitor in the rearview mirror that's raised a lot of money? Does that impact you? Is that a factor you need to think about?
So we don't really. Our biggest competitors are the traditional furniture retailers like West Elm, Crate & Barrel, CB2, Pottery Barn, etc. IKEA to some extent, and so we're less worried about them. But I am worried about somebody else copying us, and I think we saw that with Casper. There's now like 40 plus companies that have come out literally and copied them. And what we have going for us is there are more barriers to entry in the couch industry than there are in the mattress industry, in that like we have patents pending on our design. Mm-hmm. That's not to say somebody else couldn't come up with another way to make a high quality couch fit in boxes, but having gone through that process ourselves, we know how challenging it is, and so we do have a lot more runway there. It's just a matter of like, if people buy into like this being a real need for people, and they buy into the fact that we've done a great job at filling the need thus far, there's really no need to wait, right? Like, why wait for somebody else to come out and copy us to throw money at it? Like, you should just we should all buy into this now and grow it as big as possible before somebody else comes out and copies us. Yeah,
good stuff. This is really great. A lot of good nuggets and takeaways. Do you have, if you could rewind the clock to your, 2016, when you're having this idea with your co-founder, is there any piece of advice you would give your younger self, slightly younger, not that much younger, your slightly younger self when you were first starting out, as it pertains to raising capital, or even just general advice for other founders watching this?
Yes, it would be to sandbag your projections. And this is a personal problem that I have, right? I tend to overpromise things. And I think my goal I was very optimistic early on, number one. Number two, I think you're eager to sell people on what you're doing. And so you want to tell them that you're going to have this super rapid growth. So now's the time to come in. But fundraising and all these things take way longer than you anticipate they will. And you can shoot yourself in the foot if you're like, yeah, next month we're going to kill it, And then if next month comes before the person writes a check, if you haven't killed it, that alone can kill the deal in their mind. And it has nothing to do with how well the company's doing. But it has everything to do with just perception.
Yeah.
Like if I tell you we're going to do $2 million our first month out of the gate, and we do like $1 million your first month out of the gate would be equivalent to what Casper did, which was the best, most successful consumer launch in history. But if you're an investor and you'd be like, they didn't do that great. They told me they're going to do 2 and they only did 1. And so it's like, there's no need to do that. I think. And so if you're better off sandbagging your projections, and then making sure you beat them, because then you just look really, really good. And so I think that was something that I did not do well. And, look, we survived it, but I wish I could do that over again. And there's many examples of people I've heard from some people that the Warby guys consistently came in at like half of what they projected they would do, and they obviously did fine. So it's not to say you can't do it, but you're not doing yourself any favors by doing that.
Yeah. Excellent stuff. All right. For anyone who's interested in learning more, is it just burrow.com? Okay.
That's it.
Great. And great. Anything else? This has been really, really fantastic. Anything else? Any plug you want to make, or anything else top of mind?
No, I mean, I don't know when this is airing, but we have a Super Bowl sale going on right now. So obviously, the couch is the most important thing when you're watching football. So that's all I'll say. But
the Tom
also,
Brady
good luck
special.
if you're raising money.
You have an Eagles version and a Pats version.
No, I'm not the biggest football fan, but God, I'm kind of sick of watching the Patriots.
Yeah, I am too. I was at a bar yesterday here in San Francisco, and it was probably 200 Pats fans and maybe 20 Jaguar fans, and it was unbearable. But what can you do? What can you do?
Yeah.
All right, Stephen Kuhl of Burrow, thank you very much for another episode of How I Raised It. Continued good success for you. And
thank you, sir.
okay, thanks. Bye.
Yep, have a good one.